Hello traders, welcome to today's end of day commentary. And well, today we're going to review the mini S&P 500. We're going to review the pound, the dollar. But first, let's start with Janet Yellen's commentaries on monetary policy and on the interest rate decision to be hiked or not. Overall, very dovish. Vis-a-vis the interest rate on the United States. And let's look at the US dollar index and the reaction of the US dollar index during Janet Yellen's remarks. Let's go to the 50-minute chart and just look at, well, how very choppy it was. And of course, we had a big pull to the up to the upside because, of course, big money was trying to trade price up to get those stops out and get a better price to short this specific instrument. In any case, very dovish. Not a lot going on the euro US dollar about it. But if you look at it, and if we look at the overall sentiment on the euro US dollar after the non-farm payrolls, if you look what happened during non-farm payrolls on the dollar, well, the dollar got pounded completely, going from a rate 95.57 to approximately 94.23 in a matter of an hour. And the euro US dollar, well, you can see that it actually went from the lows and emerged for about 220 pips. But now that we have that in the past, and well, we have a huge reaction to this zone of previous support now being tested at resistance. If you want me, I'm going to actually zoom in a little bit. You can see that this area was heavily tested before it broke, and now it is being tested as support, and it's right at the 50 Fibonacci retracement, which means that we have retraced, or we have rallied 50% of the dip from the high to the low. And not only that, we have hit those Fibonacci expansion um, targets from longs that well started to accumulate around the 111,023 level. So, is this a good opportunity to go short the euro US dollar, which will mean to be bullish on the dollar? I really don't think so, guys, because, well, one, we have those weak, we had those weak job numbers last Friday, and now a very dovish stance on on the interest rate from Janet Yellen, which means that we will not have a rate hike on the next FOMC meeting. And I saw on Bloomberg today that the possibility for a rate hike only goes above 58% on the December meeting. So basically, I'm still very dovish. I'm sorry, very bearish on the dollar, which would mean that I am bullish on the euro US dollar. And this means that not only, I'm sorry, this is my alarm. Not only I am not going to go short here, even though it's a great opportunity. I think uh, if we didn't have those remarks by Janet Yellen and those poor job numbers on Friday, this would be a great opportunity to go short on the Euro USD. But I am not going to go against fundamentals here, and of course, after a very strong move to the upside. So what I'm expecting here is maybe a move to the downside to test again these levels right here. This is a very strong area of demand. Now, if you, I'm going to just uh, go over this zone again, and maybe we are going to get a test of this area and move back up. So maybe if we retest this zone, it's going to be a much more profitable trade to go long on the euro US dollar at these levels. Okay. Now this is my view on the euro USD. Really, I'm waiting for a retracement back to these levels, and if we grab a Fibonacci tool, let's see from the low to the high. If of course we think that this is the high of the move, because we don't know just yet, because we haven't made a new low, which means that this might not be the high of the move. Okay, so you have to understand that this is a very speculative Fibonacci retracement level right now. But if we do get a retracement back to the 50, I would gladly go long here for a play on a continuation to the upside, maybe to test not the highs, but the levels around them. This is basically what I see on the Euro US dollar. If we go to the GBPUSD, well, you can see that the pound, well, the pound is another story. We have the Brexit coming up. Well, the votes about Britain leaving the European Union, and you already know that if Britain leaves the European Union, well, this is going to be very bearish for the pound, and the pound dollar is going to drop immensely. Now, if you look at the weekend gap right here, you can see that the market opened actually at the 44.62 level, and then dropped for about 110 pips, just on a poll that showed that the leave voters were ahead of the remain voters, which means that this is the second poll that has come out, giving the leave voters um, a lead on the votes, which means that this is very bearish for the pound. And nevertheless, we did hit some very important levels right here. And I'm going to zoom in, and I'm going to show you these important levels that we hit. This is a very, but very, very, very strong area of demand right here. Not only we are at the 50 Fibonacci level, and even though we have broken with the up structure, and we do have some very technical bearishness coming from the 47 level. All right, because we have tested it once, twice, three times before actually breaking with the up structure. We do got some buyers around these zones. Okay, and well, if you look at the order book, which I don't have in hand right now, but you can look it at Wanda, or you can look at yesterday's market forecast, where I show you that we did had some very, very big buy orders around the 43 50 43 level, and which well, were not absorbed by sellers, which means that this demand zone, or this support area held, and now price has moved up in a very choppy manner, but it has moved up for about 100 pips. I didn't take this long because I took it. I took the play on the GBP USD. Um, I'm sorry, the GBP yen, um, on a relief rally, which yield a better risk to reward scenario. But I really don't think that we are going to go higher than the gap fill. And to be really honest, I am not planning on trading the pound too much these days, because at any time you can get a pull which will move the markets. And well, you have to be very careful in what you're doing. And you really shouldn't be trading the pound if you are not using stop loss, or if you are well, a beginner trader. Okay, because you are going to get some moves out of the market that might uh well, that might spook you and you don't know where these moves are going to be coming from. But in any case, we do have some technicals that I want to point out here. So let's put some up arrows here. We do have this area that makes for a very, very nice well, a very nice range, and this range has been going on since the end of February, and it's about 350 pip range. Okay, um, I really, really don't know what's going to happen with the pound, but you need to be careful. And this was the area that we said last week that we were looking at, and we did have some reaction out of it. Just a quick look on the Euro GBP, which has gone through a lot of very important levels. Now, let me just get rid of some of these fibs because this chart just looks so cluttered. Okay, so what we have here is well, this currency pair was trading in a very nice up, or I'm sorry, down pitchfork, and well, we got some resistance around the 7750 level, which we took and got out a break even before this extreme rally to the upside. We hit some very nice Fibonacci retracement levels, which are also some targets at the 88.6. Now, what we have here might be a harmonic move, if you want to look at it, all right? But I really don't think that playing harmonics with the pound is going to work right now. Again, I'm not taking a short here because a bullish stance on the pound is not what I want to be standing at right now. But if we grab some Fibonacci expansion levels, we might find some. Well, actually, we're going to cheat on those expansion levels and grab some fibs to see where we are at. And as you can see, we are at the 423.6 around these levels, okay? And this is what uh, well, what I'm talking about. We have hit some very important levels um, not on the pound and on the GBPUSD, on the Euro GBP. I can show you also the GBP yen pound. I'm sorry, the GBP yen chart, but I mean it's going to be the same. We have hit some very important levels, so I think that a retracement is due for a continuation. So I'm going to be watching these zones uh, around these highs right here for maybe a play on the long side of the Euro GBP. Now let's go and watch some crude oil. And we haven't been trading crude oil lately because we are in a very, very, very choppy market right now at the top of this wedge formation. What we need right now is just a break above or a break below. A break below would be very nice, and we would look for a long opportunity around the 47.47 level. But really, there is nothing much to say about crude other than for us, it's very untradeable price action at the moment. If you look at the hourly, you can see how choppy price action has been, and we did well. The last good trade that we had was this short move, or this move to the downside on which we shorted crude, and we took. Let me see. If I'm not mistaken, we took 70 or 80 ticks out of the move, and basically that's it. We are just waiting for a break above or break below um, this huge wedge that price action is trapped in. Now let's look at the emini S&P 500 and let's see what happened with Yellen. And well, I was expecting a bullish move on the emini S&P 500 on these Yellen remarks about the interest rate, because remember that if we don't have a hike in interest rate, this is bullish for the stock market, because for companies it's going to be cheaper to acquire capital. Okay, so as expected from the remarks, we had some bullish continuation on this very bullish market that we are in right now. Well, it's not a very bullish market. We actually broke through this uh, very choppy wedge, kind of a wedge actually. But I mean, this price action was very untradeable. The last trade we took on the E-mini was a while ago, actually, because we did miss this breakout. And I think it was this bottom right here on which we took a couple of, I don't know, about 10 points or so. But right now, what we are expecting this, well, this instrument to do is uh, to maybe move down a little bit before breaking with these highs. Okay, the 2828 area. Remember that these all-time highs on the E-mini S&P 500 are very close. If you look at the weekly chart on the E-mini S&P 500, you can see that it has been very hard to break through the 2130 area. And what are we going to do right now? We're just going to wait for the test of these zones. We are not going to try to get into a very bad long trade right now. And if we go back to the 4-hour chart, I mean, you can see that we are very close to those zones, to the 2130, which are, well, all-time highs. And what we need right now is just maybe a test. Let's go back to the daily and let's look at what we are playing with right now. We are at this zone, and well, maybe I mean, if we break with this with the 2109 and retest it, we can take a long trade to the 2130 zone. But that would be I mean, that would be the only thing that I would consider if we break. If we don't break with this, I mean, we could consider a short, a short trade to um, back to the 28 to 20 86 2082 level uh, for a continuation higher and a break above. But really, if we take let's take some inverted Fibonacci retracement levels to see where we are standing right now. Remember that, I mean, some of you might not know this, but this is a way of cheating with Fibonacci expansions. If you invert the Fibonacci retracement levels, you're going to get those expansions right there. And as you can see, we have hit some important targets to the upside. The 21 the 261.8 is right there with the 2109 level. But I mean, the E-mini S&P 500 can be very unpredictable, and you do have to look at the book when you're trading. We here at Snipe the Trade, we not only we look at the charts, but we also look at the book when we are entering the market. And if we decide to go short, I mean, we do have to be below this area. Okay, uh because I am not going to take a short trade with an unconfirmed with an unconfirmed setup on the emini S&P 500. We do need to be below this zone. So I'm going to put an alarm here, an alert right here at the zone. And if we get down to the zone, I'm going to analyze the book. I'm going to analyze fully this chart, but really for the time being, I'm just waiting for some reactions. And basically, this is what we had today. And thank you for joining us, and I'll see you tomorrow.